Hello and welcome to this quarterly update with SKAGEN Kon-Tiki and Portfolio Manager Cathrine Gether. First, Cathrine, SKAGEN Kon-Tiki is slightly ahead of its index in the second quarter. Give us a recap of what happened in the last 3 months.
Emerging markets were quite strong over the quarter. They were up 3%. That compares to Kon-Tiki being up 3.5%. In terms of the outperformance, it was mainly driven by very strong development from some of our Indian holdings, like Mahindra & Mahindra, State Bank of India, as well as UPL. To a certain degree, they actually all benefited from expectations of a good monsoon period in India, but they've also had very strong results coming out in the period.
Now, in April, there were signs that emerging markets were coming out of the woods. What is the outlook now, post-Brexit?
On a relative basis, I actually think Brexit could be a positive thing for emerging markets, but I emphasize it's on a relative basis. Emerging equities have underperformed for a long time now. What we have seen so far this year is actually that they are ahead of developed markets. What we know is that Brexit is likely to impact developed markets more than emerging markets in terms of the economies. It has exposed Europe to a prolonged period of lower interest rates. It is also increasing the likelihood of Fed pushing out further rate increases. And in that environment, that's usually a good one for emerging markets. If you look at it on a relative basis from a valuation perspective, emerging markets now are starting to look quite cheap. You actually have to go back to the dot-com boom area to find a similar gap in the valuation for emerging markets versus developed markets. That in itself should be supported going forward.
All right, now, emerging markets are, as you obviously know, more than the BRIC countries. Where do you find value going forward?
I would like to emphasize that we do actually focus on individual companies, and so we don't really look at markets in general in that sense. But what happened with Brexit is that we did have a lot of volatility and lots of good quality companies in Europe being hurt quite a lot. So at the moment we are looking into some very high quality companies in Europe with a lot of emerging market exposure. The last company we invested in is actually a Brazilian company, which is a bit surprising because Brazil has been a very strong market recently. It's up 34% year to date, but we can still find very cheap and high quality companies there.
Thank you, Cathrine, and thank you very much for watching.